Good morning, good morning, good morning. Happy Saturday. How are you doing? Well, thank you for joining us on a Saturday morning. This is Michelle from Weightage. I'm the CFA Program Coordinator. So, what do we have here today? Well, we have the CFA Level 2 lecture preview, which is under the topic Currency Exchange Rate by Mr. Darren DeGraff. He's our favorite lecturer all the time. And of course, after that, we will have Mr. Bing Hui, the Managing Director of AB Maximus, who will also join us in the session for a short this forum as well as a Q&A session. So without further ado, let me pass the stage to Darren.
Awesome. Thanks, Michelle. Okay, so I'm just going to remember how to share my screen. 1 second here. Okay, there we go. All right, so let me just put it in presentation mode. Okay, so if I understand correctly, we can, you folks can raise questions about either about the content from this PowerPoint or from on the Bing Hui's presentation, which is going to follow. So please, in order to make this more interactive and engaging and entertaining, if I can dare say that when you talk about econ, but please feel free to do that. So I don't know if Michelle or others could remind the students how they may flag or raise any questions they might have. My presentation is probably going to be about anywhere between 20 to 30 minutes, and really it's just to kind of get you folks into the CFA mood, and therefore maybe stimulate some conversation further about the CFA program as well as our course offerings. Okay, so the way I'm starting this presentation is what some people call a flipped approach, which is where you start with a question first, and then we do a little bit of a mini lecture. Now, younger folks actually sometimes call this hacking, if you will. So don't worry if this is a concept that you haven't seen for a while. I am going to give a little bit of content in just a moment. But what I'm going to do is I normally pause for about a minute. The fact pattern is quite short, so I think a minute should suffice. And I'd like you folks to try and figure out whether you're going to get A, B, or C. Now, I do have about 7 questions, but I only anticipate going through a few of them today. But if you do have a pad of paper, maybe pull it out and see if you can't figure out what the right answer is. Now, to help some of you along, and this is what I do, I often interject and not just wait until the end. What you want to think about are things like the currency pairs. You want to think about liquidity in the market, whether or not this is a large transaction, whether or not this is a small transaction. You want to think about things like whether or not this is a customer that maybe you want to win some business from. As an example, one of my colleagues who worked at a pretty big bank back in Canada, he was working with some clients on underwriting some debt. And at the same time, they thought, well, maybe they could also get some of these folks to become asset management clients. So those are kind of the main considerations. What is a currency pair? Is it thinly traded? Is it actively traded? Again, is it a large transaction, small transaction? Do we want to win business from this client? So maybe that will help. I'll pause for another 30 seconds, and then I'll go through the solution together with you. And if that doesn't help, a couple other tips about the dealer. Now, there's an old expression, which is you always get screwed by the dealer. And it's a really, really simple and silly way to remember that the dealer is the one that buys low and sells high. Okay, so if you think about that for a moment, you have a bid and ask. Okay, well, whose is that? Well, bid, remember, bid is buy, and sell or offer, offer is to, or the ask is to sell. So again, bid buy, that's easy to remember. And then the offer or the ask, sometimes they use offer, sometimes they use ask, that is the price they're going to sell. Now remember, folks, the dealer, right, their kids need new shoes too, right? They have to put food on the table. So bid is what they'll buy. And so that's how you'll always be able to remember, again, when I say you always get screwed by the dealer, right? Because the dealer, right, he has to buy new shoes for his kids, right? Or her kids or whatever. So buy low, sell high. Well, for us, what does that mean? That means our mantra is the opposite. We don't get to buy low and sell high, right? We have to buy high and sell low, unfortunately. So that's probably one of the biggest hurdles to get around when you're looking at bid-ask spreads. The other thing to note finally is that with a bid-ask spread, bid-ask spread, again, that's what's going to put food on the dealer's table. So if they buy low and sell really high, then that's a bigger, in effect, a commission for them. Okay, so again, maybe take note of what your answer choice is. I'm going to show you the solution now, and let's see if you didn't get it right. So the correct answer is A for this one. So it's not going to be B or C. I'm going to show you in a moment when B or C would be a good answer choice. But for this one, it's all about liquidity, okay? And the other thing to note about liquidity is that if you're talking about, if you're talking about a thinly traded currency, then it doesn't matter. If it's thinly traded with euros, okay, then presumably also that illiquidity pervades the entire market, okay, that interbank market or what have you. So so that's not a typo, right? It's euros and USD. We could put some other currencies there. We chose euros and we chose USD because they're both obviously widely traded currencies. So no, that's not a distractor there. Okay, so again, with this question here, it's really about liquidity. We have a thinly traded security, so it's about liquidity. When you have illiquidity, which we have here, what do we do, folks? Do we move everything up? Do we move everything down? Do we move one this way and one this way or whatever? No, we widen, right? We widen both the bid and the ask. Okay, so as I said before, it's going to depend on whether you might change your bid-ask spread if you want to win a new relationship with a client. I already mentioned that. Transaction size. Is it a big transaction? Is it a small transaction? And about liquidity, which is what that first question was about. So just to add to that a little bit, again, talking about liquidity, that's what made choice A correct, but we've already beat that up pretty good. So when might we choose B? Okay, so B read, increase both the bid and the offer. Now, the reason why we might do that is for larger transactions. So on the exam, if you see that we're dealing with a very large transaction, well, why are we going to move both the bid and the offer up? Well, that's because the bank might need to do that in order to fill the order. Okay, because we need to be able to purchase the needed amount of currency. We need to fill that order. But why would the dealer then, shortchange themselves if they have to raise the offer? Why, right? What they're going to do is they're going to move the bid as well. So it would move up, okay, but retain its girth. Okay, so it's going to go up but retain that width. Smaller transactions. Now this is just a hassle. So Beng Hoi knows I've done a lot of work over in Malaysia and Singapore and Brunei and whatnot, and he's seen me at that, the wicket, just trying to change, like, can I have like 300 ringgit, please? So I'm like that small fry. I'm irritating, right? So what they're going to do is they're going to say, you know what, you're just a hassle to graph. So we're going to once again increase the bid ask just so that we can kind of like feel good about ourselves for the hassle of that small trade. Okay, Beng Hoi, on the other hand, yeah, he's over here, right? Or he's maybe one of those clients that we're trying to win business from. And in that case, that would be answer choice C. So let's go back to C here. This is where you have flexibility. You could increase the bid, but you could decrease the offer. In other words, there's a little bit of flexibility. You're not just moving the window up or potentially down. Okay, so hopefully that helps. This slide here kind of adds a little bit more color in case you do see other cases on game day, which you very well may. All right, now this is probably the toughest question in all of econ, and it has to do with triangular arbitrage. And there are a number of reasons why it's difficult. One of the main reasons is normally what will happen is that one quote, okay, as you can see here, is going to be in direct quote. And then the second quote, okay, is going to be in indirect quote, in indirect terms. Now, what I mean by that is generally speaking, a direct quote is going to be domestic over foreign. Okay. However, if that's not the case, then you have to flip it. So if you have your calculators with you, it's not that bad. So the first one is okay. You can leave that one alone. You can say, okay, let's just assume, right, that the Australian currency is domestic and the US is foreign. So what that means, folks, is that that's the price and that's the base. So price currency is always in the numerator. The base currency is always in the denominator. And if it's a direct quote, then you're going to have your domestic currency in the numerator, and you're going to have that foreign currency in the denominator. So here's the problem, is that the currency algebra, as my buddy Peter Lento likes to call it, it just won't work, right? If you try to go AUD over USD times BND over USD, folks, what do we got? We got ourselves a little bit of a dog's lunch here, okay? What we're going to have is we're going to have AUD BND over USD squared. The last time I checked, that's not going to work, okay? So here's your mantra with triple or triangular arbitrage, or triple currency arbitrage, as I like to call it. You flip it and then you switch it, okay? So when I say flip it, there's a function on your calculator, 1 over x. So I want you to take a moment to check that out. Now, there is the HP12C, which, again, my buddy Olinto uses. I like to use the TI-BA2+. I believe Bang Hoi's a believer in that one as well. Anyway, it's right. Where the hell is that button anyway? 1 over x. Oh, there we go. So if you can see it, that's 1 over x. So that's the flip it. Now the switch it is because once you flip your currencies, you now no longer have an ask. If you started with an ask, now you've got a bid. It's really quite tricky, right? So in other words, as soon as you flip it, like if you flip a bid, you don't have the opposite of a bid. You now have an offer. Okay, so one more time. If you flip a bid, you don't have a direct version of an indirect bid. You now have a direct version of a direct indirect ask. So that's why not only do we have to flip it, hitting the 1 over x, you have to switch it. You have to switch from Manchester United right over to Barcelona. Like you got to switch teams. And there's a slide here. I'm going to go quickly past okay, there we go. Quickly past the solution. This is what I'm talking about. And I'm going to come back to this slide in just a minute after I let you folks try and figure this out on your own. Okay, so again, you flip it, okay, and then you switch it. Now, this is with direct quotes. So this one is quite straightforward. You're going to go USD over GBP times GBP over Euro. So these folks nicely cancel out, and you're left with US over Euro. That could happen on game day, but I don't think so. I think you're going to see the ultimate shitstorm. Okay, and that's where you have to flip it, right? Where you're going to have to go 1 over X, okay? And then you're going to have to switch from the home team to the away team. Okay? All right. So let's go back quickly here. Hopefully I didn't show the answer. No, there we go. So I'm just going to clean this up a tiny bit. And I'm going to give you folks a couple of minutes. Now, because it's going to be a little bit longer for this one, I can see it. I'll see if I can't find any. I often like to play a little bit of background music. We'll see. We'll see if I'm in the mood, if I can find something. But just hang in there for just a couple minutes, because I do want you to try and spin your wheels a little bit. Because if I just go through the solution quickly, you're not going to appreciate just how tricky questions like this can be. Okay? So 2 minutes, and I'll see you on the other side. Okay, so again, if you're struggling, remember you're going to want to use this currency here, and then you're going to want to flip it and switch the indirect. So you're going to want to take this one, which is the switch, and you want to flip it. Okay? So again, you want to take this, which is actually the ask, but you want to flip it and switch it. So you want to take the reciprocal, and then you want to switch it so that it's no longer an ask, but it's actually a bid. You have to bring that over to the other side. Okay, and that's going to get you the cross bid. And then to get the cross ask, I'm going to pause for a second to allow you to do this part first, and then I'm going to show you how to do the cross ask. Okay, and then the other side is the same idea. Okay, you're going to take this number here, and then we're going to need to flip, and then also take the, we're going to flip it and take the reciprocal. So I'll give you a moment to do that. So again, this column here is bid, and this is ask. This is a direct quote. This is an indirect quote. Okay, so let me show you to see if you got it right. So I'm going to show you the currency algebra first because that's arguably the hardest part. So let's go back. So we got the 1.1182. So let's go back, clean this up. All right, so as I said before, we're going to calculate the bid first. So we're going to grab this, okay, and then pay attention. We have the 1.3892. Let's go back. Notice that it's this one, right, folks? Remember, you're gonna flip it and you're gonna switch it. You don't grab this one. That would be a mistake. People will do it on exam day, right, because of nerves or lack of preparation or what have you. But don't make that mistake. Okay? So that's the first part. Okay, and Michelle, I just want to check in if we've seen any questions come in. No? Okay, not yet. All right. If any come in, just let me know. All right, and then for the ask, you're going to take the 1.1183, as I pointed out. You're going to grab this one, and then you're going to multiply it. You're going to cross, right? You're going to flip it and switch it. So we have to take this number, and we have to flip it, right? 13382. And what does that give us? What does that give us? Okay, that gives us a range here of, oh, here we go. It's written down, 0.8049. Okay, they've dropped the 2. And then to 8056. So they've rounded that as well. So folks, that is what we call the implied interbank cross rate. What I'd like you to write down is I like to call these are the calculated cross rates. Write that down. Okay, these are the calculated cross rates. Now, folks, here's what we're trying to do. How will we know if an arbitrage is possible? How will we know? Okay, how we'll know is when there's a gap, okay, between the calculated rates. Now, in this case here, are they higher or lower? Let's see. They look to be, yeah, they're higher. So the calculated rates are higher, and that's fine. It could be higher or lower. It doesn't matter as long as there's no, what is it? Like if this were a Venn diagram, there's no intersection, if you remember from level 1 stats. Now, for the first part, what we have here in this range is we have 8044 to 8049. So let me put it all together so it's really, really clear. Let's write it down. So that's what they say. Sometimes a picture's worth 1,000 words. Or you can have closed captioning. There we go. Okay. So here we go. So 0.8038 to 0.8044. So that's one range. Now we're looking for overlap or lack thereof. So then we look at these calculated rates. So this is the dealer, folks. Okay, that's the dealer bid ask. And then you have the calculated bid ask. And that's going to be 0.8049 to 0.8056. So let's pause for a second. Remember, folks, in stats, if this were a Venn diagram and there was overlap, what that means then is that there's no arbitrage. Okay, but that's not happening here. In this case, what's happening is that those two ranges, they're like here and here, right? We have the dealer, and then we have the calculated on this side. So folks, when there is no overlap, what do we have? You guessed it. We've got ourselves an arbitrage opportunity. Buy low, sell high. Okay, so folks, what are we going to buy it at? Well, remember, the dealer has the bid and the ask. The ask is the price that we buy it for. So we buy, okay, at 8044. Because remember, this is the ask, the sell, the offer, the sell. So they sell it, we buy it for 8044. And then you go over to the calculated, the cross rate. Now, the bid is what they will buy it for, which means what we will sell it for. So we're going to sell it for 8049. Now, look at that. We have a risk-free profit, which is what arbitrage is. We have a riskless profit of 0.0005. Okay, what do you think? A lot of moving parts, right, folks? But you know this is going to be a lot on exam day. So make sure you practice it. You saw it here today. Hopefully you took good notes and you'll be ready for it. Okay, so let's summarize. Remember, you always get screwed by the dealer. Dealer's got to put food on the table. Kids need new shoes. So the bid is what they buy it for. Ask is what they sell it for. So it's the opposite for us. The other thing you have to remember is to flip it and switch it. So when you're trying to find your rates, you use this number here and this number here. You cross from the home team to the away team. And if you're going to multiply, then you're going to want to use the 1 over x. Now, if you don't want to multiply and if you want to divide, as they did in this solution, then you don't have to use the 1 over x function. All righty? Okay. Okay, now what if it's a little bit easier? So the easier case is where, once again, you have both of your quotes are in direct quotes. So you have USD, GBP, GBP, EUR. So here we go. We're going to multiply. Remember, in this question here, they divided. It doesn't matter. You could divide or multiply, tomato, tomato, potato, potato. It's really up to you. 6 of one, half a dozen of the other. We don't care. Just be consistent. Okay. I like to multiply, but then again, I'm a little bit of a interesting fellow. So whatever floats your boat. So if you multiply, you'll notice here, again, as Olinta likes to say, that the currency algebra has to cancel out. So here we go. We have the 1.2617. Boom. There we go. Now, folks, notice here that we don't have to cross to the other team. Okay, and that's because this quote is also in direct quote. So we can go GBP over EUR. So we grab that 0.881. We drop that in there. Boom. The GBP, the pounds cancel out. What are we left with? We're left with US over Euro. Now that's the bid. For the ask, same idea. 1.2613. Boom. We're going to multiply. Okay. So we're going to multiply by GBP over EUR. There we go. The pounds, once again, they cancel out. You're left with US over Euro, and that's going to be your ask, otherwise known as your offer. Now, that's going to be the easier one. Let's hope that you see that on exam day, but I just don't think so. Okay. I always kind of express, or I like to share the Jackie Chan philosophy, which is, you be optimistic, you hope for the best, but not like a dum-dum, right? You prepare for the ultimate shitstorm on game day. Okay. So you hope for the best, right? But prepare for the worst. And that's going to be where you're going to have to do that flip it and switch it approach. Okay, so here we go. So we start off with a 1.26, whoops. We start off with a 1.2617, boom, there we go. And then we cross over to the other side. Okay, so the 1.13507. Now notice here that they put it in the bottom. Okay, that's fine, right? Or you could, well, basically that's what they're doing, right? They're doing the flip it and switch it, which is fine. And then that gives you a bid that you see here. And then for the ask, again, you take the 1.2613, okay, but then you have to switch to the other side to get the 1.3469, which you drop here. That gives you the ask. Okay? So if you go back here, folks, notice that you see this value in the numerator, whereas here you have to 1 over x. So again, you have to flip it, which is what we do here by putting 1 over x, okay? And you also have to switch it. And this is probably the case that you'll see when you write the exam. Okay, so I'm just going to pause for a second here. That's about 30 minutes. So why don't I pause for it? I'm a big fan of mixing things up anyway. And Beng Hoi is a lot of fun. So what I'm going to do, I'm just going to see here, assuming he's ready to rock and roll, I'll pause for a second. I'll pass the baton over to him. And I'll be back anyway, because during the Q&A, you might have questions about the content as well as our program offerings. Okay? So thanks for your time. Hopefully you got something out of it.
Okay, hi guys. I have a few slides. I've got a few slides here, and basically, so what we're going to do is, let me share my screen, right? Give me a second. So it's a PowerPoint. Okay. Can you see this? We're good? All right, here goes. Presentation mode. Okay, so we're going to do a quick forum here, and after my few slides, we'll open this for Q&A. All right. I'm going to skip this part about AB Maximus, but essentially, we've been running CFA training programs for a long time, more than 2 decades. Now, just want to quickly remind the audience here about the curriculum. So for 2021, it is still based on the 2020 curriculum, so no changes between 2020 to 2021. So if you have materials from 2020, that's okay. All right. And then also want to highlight that there are some new readings at level 2, and this is the list of the 5 new readings at level 2. So you can take a snapshot of this. But essentially, these are the so-called hot topics, that were in the investment industry in 2019, 2018. So therefore, it kind of, spilled into the curriculum in 2020, right? So, which kind of reminds me of the curriculum planning cycle. Normally, it takes 1 to 2 years from something that's happening in the industry, and that kind of flows into the body of knowledge, to my understanding of the CFA curriculum. And of course, once it's in the body of knowledge, then it becomes part of the exam. Okay, so this was like 2018, 2019 kind of hot topics: machine learning, big data, ESG, and then a little bit of expansion of the ETFs, and of course, in the last 3 to 5 years, there were some innovations in terms of the trading and electronic markets, right? So that flew into level 2, and then in level 3, there are 14 new readings. Okay, it's not that you guys are, some of you, or rather most of you are not in level 3 now, right? Because we are in a level 2 forum, but do bear in mind that there were 14 new readings, 1-4 in level 3. You can check them out, the details later, by looking into the 2020 learning outcome statements. But this is another kind of tip that I want to offer as well. And you would kind of expect it too, because when you have the new curriculum being featured, probably you might see these coming on into the exam questions. Right? Otherwise, what's the point of introducing new curriculum or new content into the exams? Okay. Then in terms of the pass rates, I'm showing some old numbers here, but I think everyone is kind of aware that the pass rates kind of, okay, that's the answer. The pass rates kind of slightly improve as the levels progress. That's mainly because, the survival of the fittest, right? The stronger candidates remain in the program. Therefore, on aggregate, the numbers do go up slightly globally. But what about in Malaysia or in Asia? I think it's pretty much consistent with the global pass rates. And obviously for people who are in study programs, whether it is our program or any other study program, or a very disciplined approach to self-study perhaps, obviously the statistic is better than this, because this is everybody added in together. Another point I want to kind of raise based on this slide is that, of course, preparation is key. That will have higher pass rates, but also at the same time, we know that 2021 is a time of change for the exam format. So exactly what are the changes, computer-based testing, and so on. You can get quite a lot of details on the CFA Institute website. But what is the impact potentially on the pass rates? The expectation, we believe, as the educators, we believe that there's probably very little change in terms of the so-called maybe level of difficulty or the overall pass rates going forward. In other words, by changing the exam format, it doesn't change the standard of the exam, and it sure wouldn't change, the curve when they mark the exam questions. So in other words, they are not going to give you any chance just because there's a change in the exam format or the mode of testing. Okay, so expect similar rigor and similar standard for the CFA exams. And then anyway, by the way, you see the no-show rate, 25%. Yeah, that is the level 1 no-show rate. In level 2, there are still no-shows, but obviously it's not as high as 25%. It's more in the teens. Yeah, some people still don't show up. That's in the teens. Okay, global numbers. All right, the exam weightage, this is the kind of previous one. Sorry, this is the current one. So you notice that it is like a kind of a range, even for level 1. Previously, when some of you were taking level 1, especially before 2020, so this is like 2020 onwards. Before 2020, level 1, the exam weights were kind of like fixed. But with some of these changes, even at level 1, the exam weightage is like in a range. So this will give CFA Institute some flexibility when it comes to, giving the exam. They'll give them flexibility to make some adjustments nearer to the exam date rather than to cast it in stone Okay. Okay, just going to skip this one. You can get the info from the CFA Institute website, but just want to highlight the exam dates for level 2 is in May and it's in August. So it's just a very slight shift by a couple of weeks for level 2 compared to the traditional June exam. But then there is a second exam in the same year, right? Second window in August for level 2. Okay, so this is like the dates that we are offering for the tuition program that we are running together with Weightage. So the regular classes would start pretty soon. So make a decision quickly, get into a study program. If you think the study program, our study program is useful, please do sign up. Get the registration information from Michelle. The dates here also includes, the online revision that is primarily run by Darren and team. And of course, we also have the online mock exam as well. So these are the dates. Level 3, that already started, actually. All right. Okay, so this is our I wouldn't say a secret sauce. This is not a secret sauce. This is not a magic formula. The route to success really is dedication, discipline, putting in the hours. So these are the steps that we recommend, whether it's level 1 or it's level 2. Do your prep reading before coming for classes so that you can optimize your time in the class, that you can even raise questions, although classes are in Zoom last year and this year. So there's the chat function during classes, ask questions during class. If you miss some classes, you can view the widely online videos anytime on demand. So all of the students in this program have access to the Wiley portal. So there's the videos there. You can download, look at the PowerPoint slides. You can try the thousands of questions available online and so on. So lots of resources available for everyone. And of course, the preparation is, go for it in terms of blocks by subjects. And then when you complete that, it's rinse and repeat, right? You do the same steps again for the next topic and the next topic. And then at the end of it, come for the intensive 3-day, equivalent to 3 days, right? Of course, we spread it out because it's online now, but the equivalent of 3 days of revision to put everything together. So during the regular lesson time, basically, our recommendation is focus on understanding the material, clear any doubts that you have. Don't worry too much if you can't remember. When you move on to the next topic, obviously there's so many new things to learn. The putting it together comes during the revision time. The exam techniques will come in during the revision time, but the regular classes, go for understanding the subject matter well, and then you move on to another subject matter. Okay. So we have some contact information here. Singapore contact information, the Malaysia contact information. We have moved our office quite recently from the Central Bank building some time ago to Robinson Road and then now to Cecil Street in Singapore. But of course, we're still very much there, but mostly running, lessons via Zoom, right? So with that, I just want to open the floor for Q&A. And of course, we'd like Darren to also join in together with me to take your questions about the program, about our program that we're offering, about the class or preview that Darren did just a while ago. Yeah, so feel free. Please do put in your questions.
Right on. Well done. Yes, as we know, Bing Hoi, sometimes it takes a while for those questions to come in through Facebook or whatever. So yeah, you and I can do our usual hot stove for a little bit to kind of like stimulate their appetites.
Yeah, maybe we can talk about some useful tips for preparation for level 2, Darren. How is it different from, say, from level 1 to level 2? We all know that that level of difficulty just went a big notch up. How can we help the level 2, get into that mindset? This is level 2 now. It's not a walk in the park anymore.
Yeah, seriously, right? Yeah. Well set up. I mean, I guess some of the generic stuff that we normally share is that level 1 has been described as an inch deep and a mile wide, as Beng Hoi alluded to. And at level 2, they tend to take a much deeper dive. And so let's say, for example, at level 1, you weren't all super comfortable with, let's say, the dividend discount model. Well, you might even be able to sneak through and without it being revealed that you might have issues with valuation. Well, at level 2, they blow the lid off it by introducing residual income model, the free cash flow models, and a few other things. So and also even with your pricing models, in derivatives, in level 1, I think the toughest thing is put call parity, which is challenging. That covered call and protective put and synthetically replicating blah blah blah. But at level 2, man, like you have to not only value, you have to be able to price all your derivatives. So remember, with stocks and bonds, value and price mean the same thing. But with derivatives, value and price can and will be different. And I think that's kind of like, so level 2 is really, really challenging. And so if you go back, I don't know if Sifu, if you want to, well, actually, no, I think I remember the values. So for derivatives at level 1, it's only like 5 to 8% for derivatives. So you can get through derivatives without your weaknesses being exposed, and they get absolutely violated at level 2 because derivatives is worth a little bit more. Fixed income is worth more. Portfolio management, it'll get exposed by the time you get to level 3. So again, you can kind of like get through level 1 if you're a jack of all trades but a master of nothing. But it just doesn't work as you start moving up and up. And the other problem too is that some students, they get a bit of a swagger in their step. It's like, well, I passed level 1, right? Well, maybe it's because you were a fresh grad, right? Or something like that. And again, you just get hammered. You just get stopped, right in your tracks at level 2. Now, fortunately, in the old days, when you didn't clear level 2, you'd have to wait a whole year. So now at least you don't have to have such a long cooling off period. But now in terms of your prep for level 2, it's probably even more important to do mock exams at level 2 because you really need to get used to that vignette style. Now, back in the day, when Beng Hoi and I wrote it, it was always standard, 6 questions per vignette. But a number of years ago, they changed that. So you could see anywhere, I think, between 4 and 6. They might go lower, but I'm not sure. I think it's 4 to 6 questions. Now, what that does is that allows them to do a little bit more digging. So in the past, if they locked into FRA, then you might see a question on pension accounting, translation, or consolidation. But now what they can do is they can maybe go after all 3. So in other words, if you have any weakness in FRA, they could just hammer you and expose that. I think a little bit easier now than before. And the way I'm making it sound like the CFA Institute is absolutely ruthless. They are. No, they just need to separate the goat from the sheep. Okay, this designation is valuable because we have a selective gene pool, and they don't want to let all the salmon up the stream, right? So some are going to make it, and some aren't. They got to separate the amateurs from the pros in some way. And also, it was described to me once why the CFA exams are so difficult. It's because finance is incredibly stressful, and if you can't cut it and can't deal with the stress of passing and studying and passing for these exams, then maybe it's time to reevaluate what we're doing here. So anyway, our job is to try and make your life a little bit easier. In our classes, you definitely have to meet us halfway. You have to put in the effort, the time, the energy. You need at least 300 hours at a minimum. If you do not have a background in finance or accounting, then it's probably nearer to 400. Okay. So how many mock exams do you want to write? Probably about 6, maybe 9. Yeah, go ahead. Take it away, Sifu.
Yeah, I think that's very good advice, Darren. Yeah, so in other words, for the audience here, like I said, it's not a walk in the park anymore compared to level 1. It's really, really a big leap in terms of the level of complexity of the question, from a standalone question testing to a kind of a mini case, 4 to 6 questions tied to one case, right? Okay, one of the questions that we often get asked, okay, I'm switching gear a little bit, is about the experience requirement part. Sometimes these do come up in the level 1 Q&A, but it's kind of reminding the level 2 audience that by this stage in level 2, you need to be sure that whatever you are doing right now or intend to do very soon qualifies for your CFA 4 years experience requirement. Yeah, you don't want to, spend so much mental energy to do the level 2 and then again realize that, hey, your experience don't count. So please do write in to CFA Institute to double check that. Although we all know that on the CFA Institute website, they do have a list of like, okay, these are the jobs. You can have a self-administered quiz to kind of tell you whether it's yes or no. But if you're not sure, kind of gray, the best thing is to write into them. Then you get an official answer. All right. Okay. Just want to see where the questions are.
Yeah. So one of the questions that often comes up is, do I need to read the CFA textbook at level 2? Didn't at level 1, but there are rumors maybe at level 2. My honest answer, and again, this is just an opinion, is that it's an absolute must at level 3. But at level 2, I think as long as you, as Bing Hui alluded to earlier, if you follow that rinse and repeat schedule, it still works for level 2. The real difference between level 1 and level 2 is just that when you're going through the readings, you just have to be able to master the material a little bit more than at level 1. Okay, so what that means then is that there is enough meat on the bones in the study guides of the major exam prep providers. I wouldn't go with those fly-by-night companies, or I can't speak to them. But for the big boys, I would say there's enough meat on the bones. But you do want to allocate a little bit more time to your initial revision. In other words, when Beng Hui said earlier, when you're going through your initial revision, that's where you're mastering the content. Okay, it's in the final revision where we teach you all those tips and tricks and things like that. That's where it's really beneficial to come to class. Okay, when you get to level 3, well, you heard it here again. Maybe a little bit premature, but you folks are strong enough to look that far ahead. Level 3, make sure that you do read the CFA textbook and also read the study guide from the provider. You actually will have the time to do both because there's less content. First of all. Number 2, it's way more interesting than most stuff at level 1 or 2. And also because, again, that survivorship bias that Bing Hui alluded to. What was it? Survival of the fittest? I love that.
Yeah, just to add on this point about, which set of books should I look at? So oftentimes we would tell students, okay, yeah, level 1 and 2 is good enough, study guide, but if you still don't understand the material, of course, ask your peers, ask the instructor, or maybe even check out the CFA Institute textbook, right? So don't throw away the CFAI materials. Is in case you need to clarify certain points. Maybe it's too brief on the study guide, right? Yeah, so you might still need that just in case. Okay, so don't throw it out of the window yet.
Yeah, seriously. Another thing that comes up is, now that the classes are online, how was the experience different from face to face? Well, I can speak from experience. I did back-to-back revisions last couple of weekends. It was Singapore, I believe. And I was surprised, Beng Hui. I didn't get a chance to update you after, but it was they were very engaged. But I complimented them because, unlike in North America, where people are more like me and maybe talk too much, we like the sound of our own voice. They were respectful, so we actually got through more material. I had to pull additional questions, out of the question bank to work with them, and it worked out really, really well. But anyway, if you're wondering what it's like, well, I don't know if it's coming through, but the energy and enthusiasm that I have, it's there. Like we were there for 3.5 hours, Friday, Saturday, last weekend, Friday, Saturday, the weekend before. And they were basically begging for mercy at the last little bit. But what was really cute, though, Beng Hui, is an update for you as well, is at the very end, I think it's maybe day one, is they said, hey, like, tell us about yourself. And I was like, what? I don't like talking about myself. I'm a goofball, and I like to play around and stuff, but you know me well. I don't talk about myself. And they're like, I just want to know what you did. I'm like, okay, I was a banker for 13 years at HSBC. It was so fun because I don't normally do that. You know what I mean? But it's just the reality of this not being face to face, is they wanted to know who I was, like how many kids I had, or just, it was actually quite interesting. So anyway, if you're wondering what these online revisions are like, they're very interactive, very engaging, and they're very productive, as I alluded to. Okay, so the questions that came in were really good. They were not like way off topic, like, this put call parity, who developed it, and why did they use a natural log? And no, like nothing like that. It was very focused, and it was fun, and I think very, very effective.
Yeah, for those of you who are not from our level 1 class, there's one additional very, very useful feature in our program is the WhatsApp group, right? So we have WhatsApp group for the participants in the class, and even before the COVID, this is just so important because you get a lot of peer support from the WhatsApp group. And of course, for those who don't look at their emails, it's a good source of finding out when is the next class.
Exactly. Yeah, it's really quite good. Yeah, so the CFA question came in about the experience of the CFA trainers for like the regular, like the however they're run, weekly or fortnightly or what have you, versus the revision trainers, just in case there's any confusion out there.
Sorry, the question was, who are the trainers, comparing the regular trainers and the... Okay, yeah. So for the regular classes, the trainers are primarily, practitioners or former practitioners who have been doing this for many, many years. And of course, in their day job, basically they are subject matter experts, all right? Yeah. So for example, you would have a CFO of a company or a partner in a accounting finance company teaching the FRA, right? You have someone who is a fund manager or former fund manager, maybe doing parts of the QM or teaching the portfolio management topic. Someone who has been in equity, teaching equities, and so on and so forth, right? So that's our model of delivering the program, even from day one in the late 1990s when we started running CFA training. We believe in this model that the regular classes, we should get subject matter experts so that you really learn and understand the subject matter. And of course, when it comes to just before the exams, of course we need a revision specialist, someone who can put the things, different topics together, like Darren, to do the revision. Yeah, so that's our model from day one.
Yeah, awesome. Yeah, it's just interesting because some students might want to know like when they'll see some more trainers from like the UK or Canada or US or whatever. So that would be more during the revision, and then for the regular classes, absolute massive amount of experience and a lot of respect for the local trainers that will be using. When I say local, I mean like in the ASEAN region there that Beng Hui pulls from. Maybe winding down, we got one more question here. I actually kind of spoke to it earlier. I don't know if you want to give it a go, big guy. I can add anything if necessary.
Did we answer this? How many mocks? I see that on the screen right now.
Yeah, that's the one. Yeah, I don't know if you have any thoughts. Like I said, I spoke to it a little bit. I thought it'd be good to raise it again.
Oh, okay. Of course, as part of the program, we do a mock exam in a simulated environment, right? But I would say a minimum of maybe between 4 to 6 mocks. I'm not sure. In your case, Darren, do you go for more or less? But I would do 4 to 6.
Yeah. Yeah, we did a study in Vancouver. This is some years ago. We had about 31 students in the cohort, and except for this kid that went back to Taiwan, I couldn't track her down. And so I was trying to track pass rates, and kind of an interesting story because I actually thought that because I couldn't track her down, I thought she was embarrassed and didn't want to report a result. Anyway, I'll give the rest of that story in just a second. But what we found is that students who did 6 to 9 mocks, they passed at double the rate. So they were more like in the 70 to 85% pass rate as opposed to those who didn't. And for the record, that student, actually did pass. It was kind of neat to find out all that time later. I think they'd moved on and were doing an MBA or something, so they just had bigger fish to fry. But yeah. So 4 to 6 at a minimum. But if you really want to knock it out of the park, then more like 6 to 9.
Okay, some years back in a Q&A, some people were saying, or some students were saying, hey, I did very well for my level 1. I didn't really go for any classes. All I did was just practicing questions. So it's kind of reverse engineering, learning by doing questions. Okay, I mean, that is one approach that may work for level 1. And level 2, I would say, can be quite dangerous because, firstly, fewer questions, right? In level 2, fewer questions in level 2. Secondly, the questions prepared by whichever company may not cover the curriculum adequately. So in other words, the CFA Institute could come up with questions or situations that have not appeared in past practice questions before, right? So you need to take note of that because there are not enough samples out there in level 2. And secondly, the curriculum changes, as you know, and especially in certain landmark years where there's a big shift in curriculum, then suddenly many of these so-called past year questions may not be so entirely relevant. So I just want the audience to take note of this. And of course, secondly, doing reverse engineering may not work at a higher level. Because you don't have the strong fundamentals. Like basically, it's studying smart, I know, but at level 2 and 3, you really need to get your fundamentals to be very strong. So putting in that regular, time and effort into learning and mastering the curriculum is very important. So that whatever the examiner throws at you, you will be able to tackle it. Okay. So don't just do questions and then that's it. It's enough. It's not enough.
That's actually a really good point. That reminds me back in the day when I heard a rumor that they would pay for some exam prep providers, they'd give maybe I don't know, $50 to write a multiple choice question, but they would give $600 to $1,000 for a proper 6-question vignette. It's very, very hard to write a vignette. So to Beng Hui's point, it's hard to find them. You might not even get your hands on that many to start with, and even if they are, it's hard to create one that's really good, right? That's probing and goes after the fundamental concepts. I agree with that. That's a very intuitive comment there, buddy. Yeah. Cool. All right. So I think we're, I can't remember what the time limit is for this, but maybe we can wind down. Oh, we got it. We got one more question. Maybe we'll kind of maybe wind down with that one? Sifu, you want to take it away?
Yeah, sure. So on the CFA website, you see that, okay, if you don't have a degree, but you have, experience, so CFA Institute puts it down as 48 months or 4 years of working experience. You can actually join the CFA program. But of course, if you just want to be safe, again, you can write in to CFA Institute, info@cfainstitute.org, and they can actually say, give you the answer. But there is a provision for that to say, if you don't have a degree with 4 years of experience, you may actually sign up. Okay, but that said, so from an educator point of view, we also want to caution this, that we're not saying that if you don't have a degree, you shouldn't come in, but just be prepared, because the level of rigor presupposes that the candidate has that academic background that is similar to someone with a degree. All right. So, for example, you could be taking a professional exam, maybe a CIMA or ACCA or something similar that is equivalent to degree. Okay, so that is no problem, entirely acceptable. Or you may have other kind of academic background that is similar and that can help you, because to really cope with the curriculum, even at level 1, the CFA Institute expects the candidate to have that level of academic ability. Yeah. So it's a long answer to a short question.
No, it's a great one, and actually true story. So my best friend from high school, he actually got me into the HSBC back in 95, and we worked together for a number of years. We ended up both in the asset management side, and we're working towards the CFA designation. But in his case, he went to a polytechnic, which I don't know if it crosses over in language, but basically a 2-year diploma as opposed to a degree. And he and I also took the CPA program together. And so he passed. Like he did, I don't know if he cleared on the first attempt or whatever, but he was pretty good, smart kid. So I'm just trying to say just to corroborate Beng Hoi's comment that yes, it is possible. But his pedigree was basically equivalent of something that would be rigorous enough, I think, as a temperature reading, right, as to whether or not the 300-hour, 400-hour would apply. If I could put it in quantitative terms, I think if you didn't have a degree and it was very unrelated, then you might be looking more at 500 hours. I'm just throwing it out there, in terms of scope. But nevertheless, that was good. I'm glad that question was raised, because that is something that I'm sure some folks were curious about.
Yeah, so wonderful. So I think with I don't see any more questions on the screen. So we would like to thank Darren for his time. Yeah, so it's, time zone difference.
Yeah. Well, no problem. I mean, I enjoy this stuff, and it's funny. I actually have an 8-hour revision that starts at 6 a.m. Pacific time. And so right now it's 8 p.m. So it worked out quite well. We're able to sneak this in, but yeah, after we're done here, I'm going to go have a good nap and have a full day revision tomorrow. I'm looking forward to it.
Yeah, wonderful. And of course, thank you very much to the audience for dialing in on a Saturday morning. So it's like 12 noon, 10 past 12 in Singapore and in KL right now. So have a good weekend to everyone. And there's contact information, Michelle's email and Andrew's email on the screen. If you have questions, inquiries, you would like to get your hands on the registration form, please email Michelle. And we'll see you again very soon. Okay, guys.
And thank you for your time, Beng Hoi. Cheers.